We know that the stock market has been moving down for quite some time now. We've been feeling that crash, as well as Bitcoin and crypto been moving down, and those markets have already been reacting to everything that's really going on. But there's one market that isn't quite up to speed yet, moves a lot slower, and that's real estate. The housing market might actually start to turn, as we've seen it recently in a lot of places, is the price is coming down. That's exactly correlated to the interest rate, because obviously the entire point of these rates is to crush demand so that they can get prices to come down, and then they can get inflation to come down with it. But there are signs showing that the housing market is starting to see it's a little bits of trouble. It is starting to turn, it's starting to drop a bit, but there's a lot of things going on that could push it down much further. And one of those signs is the home buyer demand, which is correlated to the interest rates. Obviously, the higher interest rates go, the more you're going to crush demand. And we have this massive collapse here. It's just basically a straight line down to where we are now. And it is around the 2008 housing crash. So that's not very good. We don't like those signs. That could mean that this might be more than just a little correction, or maybe even just a little crash in the housing market. Maybe it's a full on collapse, which would make sense if rates were 2% before. You saw this buying, housing was going up in price drastically. And now you went from 2% mortgages to 7% mortgages. That more than doubles the expense of a mortgage, makes payments very expensive, and kind of dissuades people from buying and people from selling. You can see in this example here, the cost of a $500,000 home, which is pretty close to the average home sale, which is crazy. But 2021, when rates were 2.5%, your per month bill for a mortgage would be 1976. People in $500,000 home, probably pretty affordable at least. In 2022, 7% is the interest rate, and your bill goes to over $3,000 per month. You can see the effect that rates have on buyers and sellers. For buyers, it makes it extremely expensive to buy the same priced home that you would have got just a year ago. And for sellers, it means you have to lower your prices in order to try and get buyers. So both are in a spot where they don't really want to be. Buyers don't want to buy because it's extremely expensive to borrow money unless home prices get like cut in half. And even then, it's still going to be a house with $250,000 if you do the 500,000, and it's going to cost the same as if it was 500,000 a year before. So it's still just crazy pricing. So buyers don't want to buy and sellers don't want to sell, because if you have a $500,000 house and you want to sell it, you probably are just going to wait until rates come back down, because why would you have a $500,000 house but be forced to sell it for 400K, 300K, or forced to sell it for lower than what you think it's worth? So interest rates are doing their job by crushing demand and trying to bring prices down, to bring inflation down. It's unfortunate that a house isn't really a massive cost that people are trying to do every single day. It's not something that's really going to impact inflation, especially with the CPI numbers, and housing, they don't really add up anyways. But if you take the average home price in the US, which is $428,000, and you do the same kind of math that they did here to see what the cost would be, you would see that for that average house price at 7%, your monthly payment is $2,800 compared to what it would be at 2.5 at just under 1,700. So it's an extreme increase in cost for no reason other than interest, which obviously dissuades buying, because why are you going to pay more for the same thing? And we can even see, based off of just the mortgage interest dates here, you can see that this spike on the right side is breaking the trend. We had this huge trend line going down, the spike going up, breaking that trend line could mean something breaks, which obviously we're seeing right now with buyers not wanting to buy, sellers not wanting to sell. That's going to maintain prices because there's just no one really trading going on in real estate. And people aren't going to buy because they're going to put it off until rates are back down. But when rates go back down, prices are going to go up even more. So it's kind of a weird situation to be in. And if you look at Zillow's data, which is pretty reliable, I mean, their entire company is around real estate. So you can see their home value index for all these different kinds of places is slowing down. Even 0.5%, 0.6% is still a lot when you go annually and say 0.5% a month. This is month over month. So if you go up 0.5% a month, that's like 6% a year. That's like double what the average real estate goes up. Real estate normally goes up by like 3% a year around there. So these areas are still pretty hot, but they are still slowing down. And you go down, you can see that some of the areas that had massive pops in people moving there and real estate there are dropping pretty big month over month, down 2% in Phoenix, almost 2% in Vegas, 1% in New Orleans. There's just a lot of places that people originally moved to, a lot of people moved to, and the real estate shot up. And now all of a sudden it's coming crashing down. I mean, losing 2% month over month is 24% loss in a year. And that would be ridiculous to see in real estate. You can see with this, the United States overall, month over month, is at 0.02%. So slowing down drastically. Overall, the US real estate is extremely slowing down. And who knows where that leads to? Could lead to prices having to fall so much more. If someone needs to sell their property, no one's going to be willing to buy it at the prices they're at now. They're going to have to drop the prices. And if they need to sell, then they need to drop it. They could have to drop significantly before anyone's even willing to buy it. And that affects everything else and all other kind of supplies in the market. So it's something that could chain together and just shove prices down. And maybe we see this massive collapse that we haven't seen since 2008. If you look at inventory, it is kind of, we saw during the hot months, which is the summer, where real estate's a lot more active. It still wasn't that great. It was on par with last year and on par right now with last year. But we're into that, the leg down where obviously the winter months, it's a lot slower anyways for real estate. So we'll probably see this come down. Question is, how much does it come down? And if we look at newly listings, we could see it could really be coming down hard. Even in the summer, you see July, this was when 2022 started really falling, and it's just continued collapsing. And now we're in the slower part. We could see it get really bad and start falling off with new listings getting very low. And obviously that's going to shove inventory even lower. And that could maintain prices higher, but it's no one really knows, because if there's not enough supply, then usually the price would stay higher, but there's going to be not enough supply and not enough demand. So you get into the same situation of, if someone's forced to sell or they need to sell, they need the money for some whatever reason, they need to get out of their house, then they might be forced to sell at a lower price, push every other real estate, every other house in the market or even in that area, push it down lower in price with it. And then all of a sudden you might get a bunch of underwater mortgages, which is a disaster. Nobody wants underwater mortgages and people to have less equity in their house than the mortgage that they have. It's just a recipe for disaster and a setup for something bad to happen in the financial space, in mortgages. And then all of that spills over into the rest of the economy and things just get really bad. So no one wants that to happen, but it's something you could be staring down. Even though people might be cheering for a housing crash to say they could finally afford housing, a lot of people can't afford housing, or saying how, millennials and Gen Z will never be able to buy a house. If the housing market crashes, it affects everything else. And maybe you would be able to afford a house if you still had the income that you had originally. But chances are, if the housing market collapses, that the overall economy collapses, and then you probably don't have a job, so you can't afford a house in the same way. So basically every single option sucks, and nobody knows what to do. The Fed doesn't know what to do with interest rates. They're trying this. The market doesn't know what to do, and the world globally for finance is just having no idea what to do. Everyone's just freaking out. And it's going to be interesting to see where it all goes and if at some point it stops. That's going to do it for this video. As always, don't forget to smash the like button and subscribe on the road to 1,000 subscribers. And I'll see you guys in my next